Hello and welcome to this special report at XM.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing how gold has been performing recently and what lies ahead. So, Marios, gold has not behaved like a safe haven lately, even though financial markets are struggling. What are the main reasons for gold's recent losses?
Well, Maria, I would argue that the main reason we saw gold fall with stock markets lately is how quickly stock markets fell. So if you were a leveraged fund, for example, and you had losses in equities of 30%, then suddenly you started getting margin calls. So in order for you to be able to stay in the game and keep your overall portfolio open, you had to raise cash. And the only way for you to do that was to sell a little bit of everything, including gold. So it's the speed with which stock markets collapsed that also forced investors to sell gold. However, I think that we are entering that this is about to change and that gold is likely to start acting like a safe haven again. Now, in fact, what I find very interesting is that this happened during the financial crisis as well. Back in 2008, when the crisis began, gold fell with stock markets for the first few months, and then it found the bottom and it started to rally to reach all-time highs in the following years. Now, I think we're entering the second phase, the rallying phase of this narrative. And the arguments, well, there are multiple reasons. The big one for me is interest rates. So gold benefits from lower interest rates, and interest rates around the world have been going down very quickly lately after the central banks cutting rates everywhere to support their economies. Now that's important for gold because gold usually competes with bonds for safe haven demand. Now that the yields on bonds have gone to zero or even negative, suddenly gold, which pays no interest anyway, looks much more attractive. So that's a big one. The second one is fiscal policy. We've heard all about giant stimulus packages in every country. Higher government deficits usually benefit gold. And the final one is risk aversion. The name of the game lately in financial markets has been fear, and I think at some point that's going to push gold higher again.
Okay, so although the overall environment seems to favor gold, are there any downside risks we should consider?
Yes, there are a couple of them. So the biggest one for me is how quickly the virus narrative evolves. So here's the thing. If the virus situation improves, that's negative for gold because risk aversion dies out and suddenly there's less safe haven demand for gold. However, if the virus situation worsens very quickly, that's also a negative for gold, in my opinion, because first of all, we might see a replay of what happened with stock markets. If stock markets are falling by 10% every day, then that eventually might hurt gold due to margin calls again. But another big one for me is that if the virus situation becomes bad enough, then we might see governments or central banks starting to sell their gold, either to defend their currencies or to finance their huge deficits. So my point here is the ideal situation for gold would be for the virus story to worsen, but slowly. Because if it worsens too fast and it becomes panic, then we might see some more forced selling of gold. Now, the other one is the dollar. The dollar and gold usually move in opposite directions. And, we've seen the dollar retreat lately. That has helped lift gold a little bit. And if it continues to retreat, that would also be a benefit for gold prices.
Marios, thanks so much. And thanks for joining us at XM.com.